Hey guys, hope you're well and having a good weekend so far. So what I'm going to do is go over all the setups that took place last week from the 12th up until the 16th of June. So last week we saw was a incredibly tough week to have traded because price was of course incredibly aggressive. Now we did see obviously a few setups, but on most days all we simply saw was price rallying without really giving much of a setup within the London session. So what I'll do is I'll go over obviously the days where there were setups, the days where there were no setups, and obviously on the days where obviously we could have taken a trade that we might have missed. So starting with Monday. Now going into the daily, we can see that price obviously has a bearish imbalance down here, which is the daily sell side, and we can see a bullish imbalance remains open, which is the daily buy side. We can also see that price has delivered on 1, 2, 3 sessions of rise. So at this point, we could anticipate some sort of a bearish reversal. Now, if we go into the 4-hour time frame, we can see that obviously price is delivered on. So just to forward play this into the pre-London Open, we can see the price is delivered on 3 bullish expansions to the upside. We can see the next drawn buy side is the swing high up here, and the next drawn sell side is the swing low down here. Now, going into the 1-hour time frame again, we can see that just before the London Open. So just going to forward play that once. And I'm just going to add in the markers as well for the sessions. So this is EU. And then we have the free, which is London. And then, of course, just the EU and London. So just before the London Open, we can see again, price has delivered 3 bullish expansions with acceleration to the upside. And then thereafter, we can see that price is given a bearish expansion to the downside. So taking a look on the 15 minutes time frame, of course, what we're now interested in is to see what kind of setup we can get with, of course, a bearish reversal being optimal. Okay. So at the beginning of the London session, we can see that price. So just before, so we can see the price, although has traded outside of the order block, we can see, just delete these for now, but we can see the price, although it has traded outside of the order block, it hasn't interacted with the H1 SST or the H1 BST, okay? So we do need to wait for price to at least take one of those out. So in this scenario, we can see the price is now broken, retested, and taken out the H1 SST. So in this case, the most likely scenario to anticipate is a break, retest, reversal 1 minute. The reason being is because we've seen a break, a retest, and price has taken out the recent high. So therefore, a 1 minute opportunity to sell is the most optimal scenario to look for. Okay. So going into the London Open, this is exactly what we're now interested in. We're now interested in a 1 minute sell opportunity on pound dollar. So the first one opportunity presents itself. So I'm just going to take this back just a little bit right there. Perfect. Now we can see that the first opportunity kind of presented itself here with price obviously delivering on an initial low and then breaking below that low, leaving an imbalance. So this could be classified as a secondary break of market structure. Now, a lot of the time, of course, what I would use is certain other confirmations such as the TDI extreme. But for now, I'm just going to focus on price action confirmations when I do these lookbacks. So let's assume that obviously we did have all the other confirmations met. You took this as your initial entry. Then short position would have gone at the imbalance with a stop going 5 pips above the high. Now, in this case, the first target to take your profit should be, so there's 2 different areas to aim for. So the first should be, of course, the bearish order block or the recent low that was created around the bearish order block as your next draw on reasonable draw on liquidity. And your second target is, in my view, the Asian range. Or considering this is a reversal opportunity, you could also look for the 800 EMA. So on the 5 minutes, on the 15 minutes, and what you're looking for is for price to potentially reverse towards the 800 EMA. So you can see the 800 EMA is positioned where the H4 SST is. So you could have set a much more ambitious profit target at the H4 SST, which is where the 800 EMA is residing. So just going back to the 1 minute time frame, so let's see how this pretty much plays out. So initially, obviously, price traded into the entry, triggering the position, right? And then obviously took out the short term a little bit, traded back into the range, and we can see that there was a lot of accumulation taking place within this range, with vector acceleration into the AOI, and then price immediately trading back into the range. Okay, but of course, the most prudent thing to do in such a situation is to simply hold on to the trade, regardless of how it turns out, and just waiting for price to either hit your stop loss or for price to run into the trade. Now, in this case, I remember that price traded into that stop, but the most important part of this is that price vector accelerated above this initial high and took out the stop. So for me personally, in this kind of scenario, what I'm interested in is a re-entry. The reason being is because usually when price gives a accelerative run above a recent high, right, before the run down, and especially as this is taking place just before the end of our trading hours, for me, that's usually an indication that price might be looking to, again, just take out the stops before running. So in this case, obviously our stops got taken out. So there's two different ways that I teach to re-enter a position. So the first thing you could do is so there are two different confirmations. I'm just going to activate my 13 EMA. The first is to wait for price to trade back into the range. And when we say trading back into the range, we're always focusing on this initial high that was created. So that's number one. For price to trade back into the range, we're not looking for another break of market structure necessarily. Or the second is for price to trade into and close below that 13 EMA. So we can see that price pretty much did that within this candle. Price snapped back and closed below the 13 EMA. So whichever one comes first. And when I see stuff like this, I usually have my order ready. I usually have ready to create a market order. So I'll usually execute a market order there and then, right? Exactly the same kind of opportunity. Again, that stop going 5 pips above the recent high is incredibly important that you always adjust that stop to the recent high in order to prevent getting stopped out prematurely. And again, that first profit target would be at the recent low, which is the same as where before. And that second profit target would be at the H4 SST, which is where that 800 EMA is. And we can see that obviously now we have a slightly better risk reward, which gives us an opportunity to make back some of the money that we would have lost in that first trade. So again, took that re-entry, and obviously that re-entry led to price delivering on a very, very nice run to the downside. So again, our first profit target was hit sort of just before the New York session started. And then in the New York session, we did see price give a continuous rundown and took out a second profit target at the 800 EMA, of course. So now there was obviously a further continuation to the downsides, but it was, of course, prudent to have just taken your secondary profit at the 800 EMA, or you could have anticipated a move into the imbalance and got in a 1 to 9. But personally, that 800 EMA confluence with the H4 SST was the perfect area to have taken your second profit. So this was a reversal trade. This was a break, retest, reversal, 1 minute variation. All right, so let's now go into the Tuesday trading session. So going into Tuesday session, we can see that on Monday, price had pretty much filled the secondary, sorry, not the secondary, price had filled the bearish imbalance to the downside. So at this point, obviously our new draw on the sell side liquidity is now the swing low, and price at the beginning of the session are traded slightly into a daily imbalance. So we can just adjust that to reflect where the new imbalance range is. We've seen the price has given us a session of reversal. So at this point, we can either anticipate a bearish continuation or a bullish reset in line with the predominant bullish trend. If we go down to the 4-hour time frame, so again, just to update those levels, I'm just going to forward play this twice. Just before the European Open, we can see that price has delivered on a bearish reversal. This is the initial expansion to the downside. And at this point, again, we can anticipate price to either give a bullish reset or we can anticipate price to give a bearish reverse continuation. So we have our next draw on H4 SST, which is this imbalance, and the next draw on H4 BST, which is this imbalance, and next draw on H4 SST, which is the imbalance below. Now, if we go down to the 1-hour time frame, we can pretty much see that price is delivered on two expansions to the downside. What we can also see is that price, after delivering this final expansion, has given us, number one, and number 2, expansion. So this is a scenario where we could obviously anticipate a reset. And the reason we can anticipate a reset, we can see that this is obviously a secondary break of market structure because price created an imbalance after trading above this initial high. So secondary break of market structure on the 1 hour is a very nice indication that price could be looking to give us a bullish reset. So at this point, of course, next on SST is this imbalance below, next on PST is the imbalance above. So reasonable to want to go long from the H4 SST if an opportunity does present itself. So going down to the 15 minutes time frame, one thing to have always been aware of, and what made this week very, very volatile, is the fact that there was quite a few red news events. So we have UK unemployment that took place at 2 in the morning, and we had New York time, and we had US core inflation that took place at 8:30 a.m. New York time. So it's very critical red news events to have sort of been aware of before the day started. So what we can see now, so I'm just going to just drag along my timer markers. Let's just take this and this and pull it across. Perfect. So what we can now see is that price is obviously traded. This is our Asian range. We have the high, the low of the range. Price is pretty much obviously giving us a bullish move outside of the range in line with that employment data release. So if we take a look at the next candle, this next candle now confirms a firm close outside of the range, okay? And this is very important because at this point, what I'm not interested in is the fact that price is obviously giving us a move directly from the low, and again, it's an equal lows. We've come from the low of the range, and price is giving us a bullish break into that sort of H4 BST. So again, like I said, the best move, the ideal move, the optimal move would have been to have bought from the H1 imbalance to trade that bullish continuation to the upside. So long would have been the most optimal opportunity. But then again, one could also anticipate potential bearishness once price delivers on that third and final leg, and we could be looking to go shorts from the H4 BST. So going into the London Open, we can see that price obviously just delivered a bullish acceleration into the H4 BST. Now, because again, there was that US core inflation red news event that I was very interested in, I was like, okay, it's likely that we could see a potential reversal just after the event. So after the event, we could see that price obviously traded into the H4 BST and gave a secondary break of market structure. Now, not secondary, gave a classical break of market structure. Now, although this is quite late in the day, it's just in New York session, I did attempt to take this trade. Obviously, there's a breaker that was created with a stop going 5 pips above the high. Right, and then of course, so that general idea was to sell from this breaker, stop going 5 pips above the high. And I was anticipating a reversal with the first target being the 800 EMA / the retest of the H1 BST. No, H1 BST, and of course the second target being that H1 SST below, so that 1 hour imbalance. Now, essentially what happened is price did trade into trigger that entry confirmation, and price did accumulate for a bit, but then obviously what we did see in New York session was a incredibly weak dollar, but we also saw an incredibly strong pound. So essentially what happened was as price went into the session, we did see a bullish continuation to the upside. So at this point for me, there was no need to re-enter the trade. Again, it was quite late in the day. This is like 12 p.m. my time. So that stop out was pretty definitive. So on Tuesday, there wasn't really any great opportunity to have traded. Again, that long was the most optimal move, but there wasn't really price like that UK unemployment data release. Obviously gave a massive shift away from this area. But now it's important to note this area because this is obviously a zone that is unmitigated. So this is an area of massive imbalance, and there is an incredibly high likelihood that when we do see a reversal taking place in the coming days or weeks and end, we are going to see price trade into this zone. So when this happens, of course, even if we take a trade, it's good to just take a note of it because this price would have a tendency to come back to close this imbalance. So let's take a look on the daily. So this is Tuesday done. Now going into Wednesday. So daily imbalance is pretty much closed. So obviously we no longer would recognize this imbalance as the next draw on buy side. So at this point, for me, the next draw, I'm just going to move this up here because I do need this later on. But at this point, the next draw on buy side was the same as our weekly BST. So the daily BST and the weekly was the same. And of course, the daily sell side. So if you look at this, the new swing low had formed down here. So the next draw on daily SST was the swing low down here going into Wednesday. So if we take a look on a 4-hour time frame, all right, so I'm just going to forward play this just before the European Open. What we can see here is that price obviously is delivered on the next draw on buy side, which is a swing high, and the next draw on sell side, which is this imbalance down here. We've seen that prices from obviously that reversal that took place on Monday into Tuesday, we can see that price is potentially giving us a bullish reset. So we've seen that initial bullish expansion on the 4-hour. And if we go down to the 1-hour time frame, we can see that prices delivered on 3 bullish expansions, and we've seen an extended run. Now, at this point, for me personally, I was like, there is a likelihood because obviously we are in that first expansion on the 4-hour. So therefore, there's a likelihood that price could deliver on a further bullish continuation. But I did want to see some form of contraction. So this obviously is that contraction that took place, a very shallow contraction, but it was a contraction nevertheless. And then obviously after that contraction, price delivered on an initial expansion. It was quite a shallow expansion to the upside. So in a way, this would have matched up with a 4-hour bullish bias on the 1-hour perspective. We have the next draw buy side being the swing high, and we have the next draw sell side being the swing low down here. So going on to the 15 minutes time frame, now the question is, what kind of opportunity are we going to have today? So we just take a look just before the London Open. Of course, long is ideal, but at the same time, we need to ensure that we're trading in line with the structures. UK GDP, PPI, and Fed interest rate decision. These are 3 major red news events that were taking place today on this day that you would have needed to be aware of. So essentially, what happened was price gave a bullish break outside of the Asian range. AOI is this bullish order block. So what I did on this day, I set a price alert at the bullish order block. And again, all I had to do was what you have to do is wait for price to trade into the order block. And you could have traded this as a break retest continuation. Essentially what happened, price traded away from the order block, didn't quite trade back to the order block. PPI came in and price was still accelerating away from the order block. And a Fed interest rate decision also came in and price still accelerated away from the order block. So on this day, there wasn't actually any setup that presented itself because again, price failed to trade back into that bullish order block. But then again, no setup on this day would imply a future setup in this general area or to this general area. The reason being is that now for 2 consecutive days, we have an unmitigated zone on Tuesday and we have an unmitigated zone on Wednesday. So at the point where we do get that extended reversal to the downside, these are key areas to actually pay very close attention to because it's highly likely that price will trade towards these dark targets. All right, so let's take a look on Thursday. So end of Wednesday, we can see the price had given a 2 sessions of rise. So we've seen that resets bullish continuation. Price had also traded into that daily buy side target. So at this point, price had taken out the daily targets and the weekly targets. So we just remove that and we just find the new daily target. So the new daily target on this trading session was this imbalance. So it's already have a label there. So I'm just going to delete this. This imbalance up here is the next draw on daily buy side target. And that's of course a new area of interest. And of course our daily sell side target is this imbalance down here. It's a very small imbalance, very fine, easy to miss, but it is there. So what I'm going to do is I'm also going to label that imbalance because it is the next draw on sell side. It was the next draw on sell side. All right, so now that that's done, let's go to the 4-hour time frame. So on the 4-hour perspective, so I'm just going to forward play this twice. So what we can obviously see here is that price at next draw on buy side is the swing high, next draw on sell side is the swing low down here. Now we can also see the price are delivered on 2 bullish expansions on a 4-hour. So and began to contract on Thursday. So therefore, the next logical move is to anticipate that third bullish expansion to the upside. Now, taking a look on the 1 hour time frame, we can see that price had obviously delivered on 3 bullish expansions to the upside and proceeded to give us that bearish reversal to the downside. So at this point, again, we can anticipate for price to potentially give a bullish continuation. The next show on buy side being the swing high, the next show on sell side being the swing low down here. Now, if we go down to the 15 minutes time frame, what we're waiting for is the setup. So essentially, we had obviously a defined Asian range. I'm just going to forward play to just drag along my markers. There we go. So what we can see is that just European Open, price gave a bullish break outside of the range, taking out the H1 SBST. So at this point, our AOI is going to be what? Our AOI is going to be our bullish order block right here. So what we saw then is that just before the London Open, we saw price obviously trade into that bullish order block. And of course, the best thing to have done is to have gone onto that 1 minute time frame and waited for price. So in this kind of scenarios, I like to see price trade back into that order block. And then I usually seek to take my entry confirmation from the low of the European. So I usually wait for price to take out the low of the European Open. And that's where I seek to actually go long from. So I remember on this day, of course, price sort of like rallied, didn't really give any move. Let's just go back to the 5 minutes. Right, so price obviously gave a rally, right? And we're just waiting for price to obviously give us that, to take out that initial low of the European session for us to get that confirmation to go long. And that confirmation actually never happened. So this is why this was for me quite a tricky situation, because again, like there are very definitive guidelines that I follow, especially when it comes to trading a BRC during the London Open, right? And especially on the 1 minute time frame, what would have needed to have seen was price obviously taking out that low of the European Open and given a 1 minute break of market structure, and then obviously the first target would have been a recent high, and of course that secondary target could have been a series of either the H4 at BST, which is all the way up here, or could have been the daily BST, or it could have been the H1 BST. So unfortunately, on this day, although bullish continuation was optimal, and we did see that bullish continuation, there was actually no clean opportunity to have engaged in a trade. So that was on Thursday. So on Thursday, we had that bullish continued run to the upside. So now let's go into the final session of the week, which was on Friday, which was 2 days ago. So obviously going into Friday, I remember this day we said we'd seen obviously 3 sessions of rise. So obviously we're anticipating some sort of a bearish reversal on this day, because we'd obviously seen price trading into weekly BST, monthly BST. So we've seen price trading into significant area of volume. So at this point, we're now anticipating that price could potentially give us a bearish reversal to the downside. So if we take a look on a 4 hour time frame, again, just forward playing this twice. The next draw on buy side liquidity, if you remember, was, so just to look back, so it was basically this imbalance that remained open where price was, and that was from a liquidity target from last year. And of course, the next draw on sell side is this massive imbalance below. And we'd seen that price has obviously delivered on 3 expansions to the upside. We're taking a look on a 1 hour time frame. We're pretty much seeing the same thing. We can see that price has delivered on 3 bullish expansions to the upside, with the next draw on buy side being the swing high and the next draw on sell side being the swing low down here. So obviously just before the European Open, what we're now anticipating is, again, some sort of a bearish reversal to the downside. So if we go down to the 15 minutes time frame, we can obviously see the Asian range that was formed. And one thing to have noted was, again, at Rennie's event at 10 a.m. New York time, which was around 10 p.m. my time. And of course, in the UK, that's around, I believe, 3 p.m. in the afternoon. So what we saw was just before the London Open, we saw price obviously give us that break outside of the Asian range in the European Open. And then obviously price traded into our H4 BST and immediately traded back into that order block. Now, at this point, I was anticipating that the best logical move in this case would be a BRR 5 minutes. The reason being is because price had delivered on a secondary break of market structure on the 5 minutes. And of course, after delivering that secondary break of market structure, what we did see is that price obviously traded into sort of this imbalance. And then from that imbalance, right, what one could have done is gone short. So the confirmation to have gone short was the secondary break of market structure with this imbalance right here. So short opportunity to present itself to have sold at the imbalance with a stop going 5 pips above the high. Now, of course, considering this was a reversal trade, there are two different targets one to have aimed for. The first target is, of course, that logical move to the low of the Asian range. Just make sure that you could have made this in a way you could have got a 1 to 2 on that trade minimum. And then the second logical move was to have traded, and again, as a habit for reversals, is to look to trade to that 800 EMA on the 5 minutes, on the 1 minute, or on the 15 minutes. So what we did see again on this day, because there's a 5 minutes opportunity, we did see the price obviously initially gave a move to the downside, but then again, it's important. This is why it's important to be aware of red news, because red news can completely eradicate what could have potentially been a good trade. But we did see that bullish move to the upside. So obviously in hindsight, one could have traded this as a BRC, right? Now, of course, trading this as a BRC would have been obviously waiting for price to trade it into this order block and then waiting for price to give a secondary break of market structure, which it did. So this is the initial high, this is the shift, this is the imbalance right here. So you could have like set that 5 pip stop below, could have gone long at the imbalance, right? And then of course, what I like to measure is, can I get a 1 to 2 to the recent high? You can't. So in this case of like taking it as a BRC, I didn't see this as a BRC because again, there was no way for me to get that 1 to 5, 1 to 2 to the recent high. However, just because price takes out the recent high does not mean that the short bias is invalid. The reason being is because remember, there are 3 different things that can happen after a market gives a break of market structure. Price can obviously retest the AOI, which is the imbalance, or price can take out the recent high and then trade back into the range. So what I was then waiting for, I mean, at this point, of course, price not like really vector accelerated above the recent high. So you would have simply needed to have looked for a re-entry opportunity because, of course, there is a red news event. And it is important to be aware that just before red news events, price can act very sporadically. So just before that red news event, price did give another break of market structure to the downside. So there's a classical break. Re-entry was at the last up-close candle, stop going 5 pips above the high. And thereafter, the first profit target should have been the retest of the H4 SST BST that was broken. It's very important that if price breaks above a key area and you can get a 1 to 2 at that retest, you should take it. So the second target was then obviously going to be the 800 EMA on the 1 minute time frame, because again, that is a very good sizable distance away from where our entry is. And of course, coinciding with that 800 is of course the bullish order block. So what you could either aim for the 800, or you could have coincided at 800 with the bullish order block below. So essentially what happened, again, this is like quite late in the day, price traded into entry, did take out the high ever so slightly before obviously rallying, taking out the first profit target, right? And then traded back into it, and the news came in. So the trade was still open, like the first TP hit, news came in, sending price into that area, but again, didn't even go close to taking that trade out before price traded back into the range. And then the rest of the day was pretty much price just consolidating around this area. So for me personally, I do think that there is a very high likelihood of a bearish continuation going into Monday, because I do see scenarios like this happen quite a lot, where price begins to reverse quite late on Friday to catch a lot of traders off guard. And then Monday, you see a continuation of that move. So that was Friday's trading session. It was a very, very tricky week, most certainly. With, of course, the only day that I did see a clean opportunity that was very, very tradable, and I did trade it in a very successful way, was on Monday. But then every other day on pound dollar was quite tricky. And then Friday, you would have needed to have sort of re-entered that trade if you wanted to have yielded some profit from it. But then again, like I said, so weeks like this is usually an indication that obviously when that reversal comes, it is important to take a note of all this unmitigated zone, because these areas are like areas that light price would likely trade into to mitigate against before a potential bullish continuation. So on that note, I hope you guys are able to study a lot of the setups from last week and learn from them. I'm wishing you all a fantastic weekend ahead, and I look forward to seeing you all tomorrow morning. All the best.